You are looking at a chart of the euro, and I am in the process of just thinking about what's next for you. And I thought, well, let's just create a video and go through the process. Obviously, this is all hypothetical, and my analysis here could be completely wrong. So it's nothing to rely on. It's just an open discussion. Okay. So the way that I would look at this is right now we are pretty close to where I think we should be. For example, there's a couple of scenarios that we need to think about. Nobody knows where the market's going. Okay. Nobody knows the future. Sure, we can use tools to try and calculate and forecast based on previous price behavior where we think the market's going, but nobody knows. Anything can happen. The current political environment is so unstable that at any point, any market can fall out of the sky. Okay, so when we do any kind of future forecasting of price action, we always need to keep that in mind. This is the daily chart, and right now, if we were of the opinion that we are simply going back up here to rebalance this inefficiency that we see here on the left. So all this selling that the market seems to be coming up to in order to balance, to provide a market that has efficiently delivered price, that could be a potential top, or what the market is reaching for. I don't like to call it a top because we really can't forecast tops to bottoms, and I don't really like to do that anyway. If we are to consider, because the market's only going to do one of two things, it's going to be reaching for a level of inefficiency to try and rebalance the market, or reach for liquidity, which would right now in this chart be resting above that high there. Okay, so we don't know out of which of those two things the market's going to be reaching for right now. Point being that if we feel that's where we're headed, then we're pretty close to that already from the current price, right? Or let's say from Tuesday's high, that there is less than 20 pips, right? Or maybe just a bit more than 20 pips. Okay. And so I would not be comfortable risking capital, which is limited, to go long for that target, because there's potential that we've now taken liquidity, which was from last Friday. We basically got the high of the month, high of the week, high of the day, that the market now, the direction may change to seek liquidity below. I don't really see any, maybe there's some inefficiency there, perhaps. Let's just see. There is a bit of inefficiency there. So it doesn't, the market could right now turn around and seek liquidity and efficiency below us, right, from where we are. Because every time we take out a high, then that is a potential turning point in the market. Okay, so we've got to be aware. We have to have that in the back of our minds that let's say the market does turn around and head down to there. What does that mean? We're going long, right, and risking how many pips is that if the market goes down there now? That's around 64 pips. So would you be comfortable risking 64 pips for a potential gain of 20 pips? That's how I look at this, okay? Even if the market was to go above that and grab liquidity, then what's the calculation? Well, from where we are now, let's just calculate that. That is 66 pips. And so again, if we were to target that, and there's no guarantee we're going to get to there, we would be risking almost 66 pips to get 66 pips. So that's a 1-to-1 risk to reward ratio. Okay, so right now I would not be looking at new positions to the upside. Okay, that's me personally. But what we could do is try and forecast, okay, where could this market be headed mathematically? Okay, and the way that I would do that, and there's different ways to do it, and this is my approach, doesn't mean it's the correct approach, this is just one approach. And as I said, I could be completely wrong. I will take this range, this current, not that range, so from Friday, high of the month, to this current low is basically a dump, right? Friday, 3rd of May, that high, and Thursday, 9th of May, that low, is the dump before this pump that we've had from Thursday onwards. Okay, that's Thursday, 9th of May. That's all of, basically we had a turnaround last week, and since then we've been going up. So I would measure mathematically that distance, okay, and I would project at least 200% of that range. So if we did from there measure up that same range, well then we would be exactly where we are now. That is 100% retracement, okay? But the market doesn't really dump down to just come back to where the dump started. That doesn't make sense. It's doing that to initiate short sellers into the market, to use that as a liquidity to fund the original move, which is what's happening now, to the upside. Okay, and so that range projected up 200% comes at 1.09019, and I will just round that down to 1.09. That's how I would use that number. So let's put a vertical line there, horizontal line, sorry, and that is at 1.09. Now remember, I'm not saying that's where we're going, but we're just trying to see, can we calculate mathematically where we think the market might be headed to by looking at its previous price action. So that 1.09 is above that liquidity. Okay, so that's a positive. Okay. And what I'll do next is see where's the halfway mark of that. And that's this here, 1.5, right? We're taking this range, projecting it up by 100%, and then projecting up another 50% of that dump. And that comes in at 1.08574. And I would just round that up to 1.0860. So we've got another vertical line. Okay. I don't know why I keep saying vertical, it's horizontal. And let's calibrate that to 1.0860. Okay. And notice a bit of, that's pretty close to the complete rebalance of this sell side price delivery, which is inefficient. Okay. So that's kind of how I would do this. That gives us two levels. So this 1.0860 is basically really, if we calibrate that, is really just there. Okay. So both of those levels seem reasonable mathematically based on the price action in the first week of May, or let's just call it mid-May, right? First half of May, we go down, and that could be the manipulation, right? Which we can see it is, because we've gone down, which is a dump for the pump, okay? And from experience and looking at price action behavior of the past, it's very rare that the dump is just to come back to where the dump started. It's really the expansion of that dump by at least, in my view, 200%. So 100%, as I said, is back to where it started, and then you add on the same amount, that same range up from its high, up from the high where you started that, and that comes at 1.09. So obviously it's just a number, it's just calculation. We could go higher, we could go not even reach up to those levels, or we could just go down from here. Okay, but that gives you some way to calculate where we might be going based on previous price action behavior. And then what I would do is monitor the market. So if, for example, I'm thinking, that's my target from where we are now, then I would kind of look at, well, if that's my target, let's just put a mark there, and this is where we are now, and we want to grade that range of price, right? We just want to split it up into 4 quadrants. So chart's getting a bit busy now. So I'm going to take this line off, and we are going to assume that, let's actually move this up to 1.09. Okay. So let me just make sure this is correct. 0 and a 1, don't need that one. Okay. So what we've done is just from where we are now to where we think the market might go, and I might just make sure that's 1.09 exactly. 1.0890 is what that should be. Okay. And what's the high? That should already be calibrated. So, sorry, that's not correct. It should be 1.09. Okay, which is what we had calculated. That there is 200% up from this dump. Okay, so if we assume that's going to be what we are considering to be the target, which is a little bit above this high here, okay, from April 24, then I want to grade. So we can take this off as well now. Let's take this off, and let's take this off, so we get a clean chart. This is now grading that move, okay, in 4 quadrants, right, from where we started to the first quadrant, 25% of that move, to the next quadrant, which now would be half of that range. And notice how that comes right in that wick, okay? And then from there, we get the third quadrant, which is now 75% of that move, and that comes pretty close to that wick. And then the last quadrant, which is up to that 1.09 that we calculated from this initial dump. And then we monitor price and see how does price behave at the top end of each one of these quadrants, and do we get price pushing through each quadrant? So do we get some kind of push through? Maybe we'll have a bit of consolidation here at highs, and you want to do this on a lower time frame, like a 15-minute or an hourly chart. And do we get a push through there? And then, do we get more price action behavior that suggests that we are going higher, right? At this level, you'd get a lot of consolidation, I think, because it's now close to this levels. Notice that first quadrant is very close to the complete rebalance of this inefficiency. The midpoint, which is at 50% of that entire range, is very close to the high of that wick. Okay. The third quadrant is very close to the high of that wick. And then the fourth quadrant takes us above that entire liquidity. So by grading this, what we've now calculated, you can see that each quadrant, its high, comes at very key levels, right? And we now need to kind of just monitor price and see how price is reacting and behaving at those levels. And I kind of want to see that We may get some consolidation here, but then I want to see quick moves up through those levels. Okay, and this is where I'd want to see price consolidate at that midpoint of that range that we're anticipating, and then I want to see very quick, rapid price movement up through from that midpoint to the ultimate target that we have mathematically calculated. By no means is there any probability of success in this move getting up there. This is simply a mathematical calculation. Okay, so take it with a grain of salt. It's just a fun way to kind of use mathematics to determine where a market might be headed. Okay, I will now talk with you in a future video.